I think it's important to understand that it's not just monetary and fiscal policy that has lit the fire under the metals. You go back to October of 2022 when the 300 billion of Russian reserves were confiscated. The following day is when gold started moving. I think we were, 1670 to 1700 at that point, and it's gold has really been a tractor in first gear. We've not had anything more than a 10% correction during that entire time since late 2022. Silver has been mentioned as a strategic metal by Russia. It's been mentioned as a strategic reserve by the United States. India, just recently, we found out that they've doubled their imports of silver, not in dollar or rupee terms, but in physical ounce terms. So the supply-demand situation on silver is very tight. And I don't know if this is because of year-end, but there's reports of a lot of mints around the world are out of silver. They're not releasing silver. Now, I don't know if that's because we're in the final quarter of the year and they're not making any more 2025s. If we were a week or two into November, I would say that's the reason, but I think this is too early. And my thought process, frankly, coming up to this number that we're at now, very close to 50, my thought process was wondering, will we have a failure to deliver and that blows silver through 50 and wipes the system out? Or do we get through 50 and then all of a sudden the amount of blood in the water, the sharks go crazy and blow it through 50 and create a failure to deliver? I don't know which comes first, the chicken or the egg, but I've been on the record for quite a while, close to 10 years now, that there'd be ultimately the finale would include a failure to deliver of both gold and silver. And it's always been my thought process, because it's such a small market, that silver would be the one to go first. So I don't know. We're in uncharted territory here.
Yeah, and it seems so early to be, when you think about what you just said, that seems to be down the road. So if it's going to happen this early, it seems like we would have more of a prolonged period of that. But Bill, gold is viewed often as a thermometer for the global financial system. In that regard, with gold having moved the way it has since the breakout last March, what is the price of gold telling you?
Well, yeah, you're absolutely right. Gold is a thermometer, barometer, whatever you want to call it. And that is the reason for the last 50 years, gold and silver have had their prices suppressed. And actually, yeah, it's 49 years since 1976 when the COMEX futures and options were created. And I mean, there's all kinds of evidence showing that naked contracts have been sold in mass to try to suppress the price. So yeah, it's definitely a thermometer. I think you have to walk away from you look at the price of gold and you walk away from it thinking, well, something's really not right. Something's not right in the monetary system. Something's not right from a fiscal standpoint. And certainly things are not right from a geopolitical standpoint.
Yeah. So are there some forces or factors that are happening right now that have you really concerned and are leading you to believe that not only this gold and silver move is going to continue, but maybe there's some type of crisis that's headed our way?
Yeah, that's why I was going to mention that to you when you said, are they going to, will gold and silver continue? I think they are pointing to a crisis. And I think it's really important to understand that if and when silver or gold fails to deliver, that will take the entire system down within 72 hours. This is not playtime anymore, where we are at the end of an empire. And I mean, the question is, where does the failure start? And I mean, it can start from anywhere. I mean, we could have World War III tomorrow morning. You could have You could have banks going under. You could have derivatives blowing up. I mean, there's so many different potentials to blow this thing up. And I think if you're looking at it from the standpoint of we've got a year, 3 years, 5 years, I don't think that's even possible at this point. This thing is going to come to a head. And I mean, everything that the BRICS has been doing, that tells you right there that the world is moving away from the dollar system. And the dollar system is a Ponzi scheme. And the thing about a Ponzi scheme is once you shut off or even slow down the new money coming into it, it implodes. And the new money coming into dollars, it's definitely less and very well could be negative because you've got the rest of the world turning away from dollars and wanting to be in a system where there's free, fair trade settlement. I mean, foreigners are sick and tired of shipping widgets and getting dollars in return because dollars, there's people out there way smarter than you and I, Gary, that have figured this out, and they figured it out before you and I did. That they're getting nothing for their something, and that's not the way people want to trade. That's like if you want to call it anti-capitalism. It's hegemony.
Would you elaborate on your 72-hour comment that you made regarding, I think the way you put it was if gold and silver go down, then it takes the whole thing down in 72 hours, or maybe it was the reverse. If gold and silver.
Yeah, if they fail to deliver, then what is the value of a contract that can't perform? And the answer is zero. And if you zero out a part of the derivative chain, now you have humongous winners and humongous losers. The problem is if the losers can't pay the winners, then the winners become losers. And think about it from this standpoint. The world runs on credit, and credit is only forthcoming if there's confidence. If confidence breaks, if confidence is gone, and credit stops, nothing in the real world will continue to work. You won't have shipping, you won't have distribution, you won't have production, you won't have anything. And as far as my 72-hour comment is concerned, how long can a person go where every morning you wake up, you're only 72 hours away from anarchy? And I say that because if people don't eat for 3 days, you're going to have anarchy. And if credit breaks, you're not going to get a loaf of bread to the store. You're not going to get tomatoes or beef or anything else to the store. And I've said this for years. The world runs 100% on credit. There's virtually no cash and carry. I mean, think about it. Think about your Walmart. Think about your grocery store. They work on 30, 60, 90-day credit. Think about builders. Think about your trucker. How's he going to get fuel if the gas station and the fuel industry lose credit? Then the fuel's not running. If the trucker doesn't have credit, he can't fill up his truck. Nothing moves. Everything will grind to a halt when credit stops.
Yeah, I see the picture you're painting there. Okay, so Bill,
but that's very real, Gary.
You talk.
That's not Bill Holter's opinion. It's not made up. I mean, that's a fact. When credit stops, everything stops. The real world stops because everything you touch on a daily basis, do this for an hour. Just the stuff that you do on a normal daily basis, everything you touch, credit has been involved in it.
Yeah. Yeah, no, I agree with you. So, Bill, you talk about, and so do so many others, that the BRICS and others, they're moving towards away from fiat and towards either net settling or some kind of hard monetary asset backing of currency. So we're in this mass changeover of the financial system. Is this something that happens very quickly? Is this a process? And then also, how significant of an impact will it be here in the Western countries that have been operating in this debt-based fiat system for all this time when this changeover actually occurs?
It'll be far worse in the West simply because everything is based on dollars. Everything's based on U.S. treasuries. And you're asking whether it's a process or a light switch. We're in the process. We've been in the process for a few years now. When a light switch goes off, that's when you get to that 72-hour window. And I firmly believe that light switch is a failure to deliver, because the failure to deliver tells you that those contracts are worth zero. And that will take the derivatives chain down. And it will also destroy confidence in U.S. treasuries. How's the U.S. Treasury going to borrow? Their only buyer will be the Federal Reserve.
Yeah, and that's a great point. And, when you think about what's coming in terms of that massive wall of debt that's maturing and needs to be paid or rolled over at these higher interest rates, we've got these ever-growing budget deficits, this massive wall of debt that's coming. The BRICS nations, as you've talked about, they're becoming net sellers of treasuries, net buyers of gold.
Correct.
This setup is really this macro setup is a very dangerous recipe. What do you expect the impact here to be of this setup here, as the massive wall of debt starts to come due here very shortly?
Well, you're already seeing that massive wall of debt come due. Look at the subprime. Look at subprime. Look at commercial real estate. Look at auto loans. Matter of fact, I was watching baseball last night, and I hadn't seen an ad like this in years, but they ran 4 or 5 times. They ran an ad. Are you behind on your mortgage? If you're behind on your mortgage, call us. We'll help you restructure it, blah, blah, blah. I haven't seen one of those ads in years and years. Look at the traffic flow going through Las Vegas. Everything is shrinking. And what that tells me is we have 2 economies. We have the financial economy and the real economy, Main Street. And money is getting scarce on Main Street. And we've seen this. I've seen this. Precious metals dealers have seen this. There's been massive selling for the last 9 months in North America. And I pretty much ask every client, why they're selling. And 90+% is because I need the money.